Tesla stock. It just keeps falling and falling and falling. You might as well be taking your money, lighting it on fire, and just throwing it in the air, because that would be probably more fun than watching it drop 10% every single day. Well, Tesla's down 70% from its peak November 2021, and you might be wondering why and what's going to happen to it. Well, I'm going to go over that, and stay tuned to learn a little bit. So the current price is $109 per share. Now, that is now not the most valuable car company in the world. That's what Tesla was at the peak in 2021 during the crazy run up, and we saw stock shares in the $400 value range. So the reasons it's dropping is for a number of reasons. The raising interest rates, global uncertainty, and just the overall competitive nature of the EV market. But I'm going to go into more detail about those things. So comparing Tesla to other stocks, we see a much worse performance in general, even compared to the tech bubble, which is popping as we speak. Apple, Microsoft, and Google are way above Tesla, and Tesla's even at the, I think after this chart, or after today, the Tesla is below Meta. And Meta is performing quite terribly ever since numbers of losing customers. And even looking at overall car market, Tesla is down quite a bit more than GM and Ford. And GM and Ford don't produce all electric vehicles, so it's not as relevant. But looking at Rivian and Lucid, Tesla's actually beating them, but Rivian and Lucid, they could be filing for bankruptcy this year. They're losing quite a bit of money, and by this year I mean 2023. But comparing Tesla to the overall market, we see a much worse performance. So if you're looking at just stuffing your money away and letting it go to nothing, Tesla could be your best option. But what are the real reasons for Tesla performing so badly? Well, we have to think about during the pandemic, Tesla was a great performer. It outperformed everything. It just went to the moon. I think it made over 1,500% since the beginning of the pandemic, which that's a pretty good return on your money. I know I kept looking at it and just wondering when it was going to go back down, and it never did until November. So the pandemic was an unexpected catalyst for Tesla. They had 13 profitable quarters, and before the pandemic, they were even struggling to make money, period. During 2018, they were a month away from going into bankruptcy. But now looking at their profitable quarters, Tesla just keeps increasing. Ever since about 2019, we have a steady increase, and in 2022, they had their best year yet the stock price has been coming down, according to FactSet. In 2020 was even Tesla's first profitable year. Tesla is the only American EV company to return a positive and profitable experience to shareholders, basically. Something Lucid and Rivian have not done. So this profitability led to a rapid growth for Tesla, along with Elon Musk and all the social media hype going into the stock. Let's remember, everyone knows about Tesla, the future. If everything goes to electric, Tesla will be the only one that can provide cars for everybody at this current time. But not all good things last, and now Tesla is down 70+% from its all-time highs. So what's happening and why is it bombing? Well, we'll tell you. So one reason is Tesla investors are concerned about the future. They're concerned that if we have a global recession, that Tesla's going to have to put growth over profits, meaning that Tesla is going to have to know that they're going to be not losing money on cars. I mean, potentially if it gets that bad, but taking less profits from each sale and basically using the money to grow the company and reinvest quicker instead of trying to make the most per share. And this also comes at the unideal time of the Shanghai plant shutting down due to new COVID. In China, they're having trouble getting workers in, so they said they're going to shut the plant down for about 8 days. Along with the plant shutting down and profits per share, they're also concerned about the raising interest rates. Raising interest rates is going to bring down the overall GDP of America, giving people less disposable income to spend on their cars. And if they have less income to just buy their cars, and they're going to have less cars being sold and be less profitable as a company, all while trying to probably grow the company, considering they're not the biggest car maker in America at this time. So overall, I think it's a more simple solution than people are saying with all the different fundamentals and charts and whatnot. It basically comes down to Tesla was overhyped, and it basically made the value of Tesla way more than it actually is, considering what they do. And now we're just bringing it back down to reality. We might be below reality. So if we're below reality, that's probably a good buying time. If we're not, then we're not. But I wouldn't give up hope for Tesla, considering in 2018, they almost ran out of money. And then from 2017 to 2020 is when they were starting the production of the Model 3. And the Model 3 took a bunch of resources. Elon said that during this span of 3 years that at any point they could run out of money within 2 months. And this is basically using them to buy using money to buy new factories, hire more workers, buy more materials, stuff like that. So to put it simply, the stock price went on a crazy run up, okay? It was overvalued. People put in money and they made tons of money. Well, eventually it's time to take that money back. So banks are going to want to see their return on their money. So you don't actually make money until you sell a stock. So people are selling, taking in their profits, but that's creating a bunch of sellers in the market, which is driving the price down quite a bit. Selling, and if you're not matching those sell orders with buy orders, then the price is going to keep dropping. First the whales start coming in and the cracks start forming, and then retail starts piling on, like we're seeing much right now. And retail is probably concerned that Tesla's crashing. So you're going to see more sellers keep popping in as the stock price keeps getting lower because they're concerned it's going to zero. And we know the case that that's probably not going to happen. Like, this is possibly when the most money can be made. I am no advisor, so you do your own due diligence. But not all news is currently bad right now. If you remember, during the pandemic, Tesla had a big problem with deliveries. I think on the Model 3, they were 35 weeks out at one point, and the Model Y 37 weeks out. So they have basically caught up on deliveries, and now they're looking at stocking their inventory. So with an inventory means that they can deliver cars on a quicker time, more happy customers, right? Well, they just recently announced that they're doing a $7,500 credit. Now, that could mean that they have too much in their inventory and they're trying to get rid of it. Maybe they're trying to fluff up their balance sheets before the end of the new year. There could be a demand problem where they just need more customers and more people to buy, basically. So if they lower the price, then they can get more customers. I think it's that they might want to make their deliveries look better. In 2021, they announced that they want to do a 50% increase from the deliveries that year for 2022. Well, it's 2022 now, and they're at 900,000, and their goal is 1.4 million. So they're about 500,000 deliveries off, and maybe this $7,500 credit is an effort to boost and get closer to those delivery goals. And just looking at the chart, even from 2018, Tesla's been consistently increasing deliveries, and now you can see they are looking for a significant increase for this last quarter here. The Tesla goal is in red, and what analysts are predicting here is in blue. So if they can fall anywhere above the analysts, that's going to be a good catalyst for their stock price. But either way, Tesla still dominates the car market, or as far as EVs in America here. Tesla makes up 61% of the car market, while the next closest competitor is Ford at 8%. So Tesla's probably going to be a good bet going forward, considering they have such a big jump on everyone. In my opinion, Tesla might have more downside to go, but that doesn't mean it's something to write off. I mean, consider the run-up that they've had in the pandemic. It can totally have that same effect again. Now, Tesla is not something I'd want to bet against, though, considering how fast things can run up. And if you're shorting something, you do not want to be on the wrong side of that, as you can lose 100% of your short. And on top of everything else, Tesla's in a much better financial position, considering they were almost going bankrupt and stock prices were going crazy. So I think the selling just needs to slow down, and then it might be a good time to buy. I'm no advisor, so you do your own due diligence, but that's my opinion.